Thank you for joining us today. I'm Erin Dwyer, the Stakeholder Liaison at the PCAOB, and we are very happy to have all of you with us today, even though we're still virtual as we've been for the last 15 months. But despite the remote work that all of us have been doing, at the PCAOB, we've continued to emphasize and prioritize our engagement with key stakeholders, including investors, audit committees, and financial preparers. And our webinar today is part of that engagement, and we're really pleased that you've taken time out of your busy schedules to be with us. Before we jump into this, I do want to give the disclaimer for myself and fellow speakers who are presenting today, and that is that the views expressed are those of each speaker and do not necessarily reflect the view of the board, other board members, or the PCAOB staff. And with me today, I'm really pleased to have as our speakers, Acting Chairperson Duane DesParte, and board members Rebekah Goshorn Jurata and Megan Zietsman, as well as our Director of the Office of International Affairs, Liza McAndrew Moberg. If you do not see Liza, it is not your connection. She was having a little technical difficulties, so she is joining us by audio today, and we apologize for that, but she's there on the phone, and we're delighted she can join us. So with that, I would like to turn it over now to Duane. And Duane, I was hoping you could kick us off with some opening remarks.
Sure. Yeah. Thank you, Erin. And on behalf of myself and Rebekah and Megan, welcome, and really thank you for being here. As Erin mentioned, stakeholder outreach is really a key focus for us, remains a key focus for us. And we're looking forward to our engagement today. One of the things that you might know is we had some developments last Friday that I thought I would just cover very briefly. Last Friday, the SEC announced Bill Dunkey's departure from the PCAOB, and I was designated as acting chair effective at that time. On Tuesday, you may have seen that the SEC also commenced a process to solicit and consider nominations for all 5 of our board positions. I expect that some of you may have questions about these changes. We would, though, appreciate if we could devote our time together today to address our agenda, which, of course, is on international audit-related issues. That said, I do want to emphasize that during this time of leadership transition, Rebekah, Megan, and I, and all of our dedicated, talented staff, we all remain fully committed to our responsibilities and to our mission of investor protection through what we do in, what we do day in and day out in our audit oversight activities. Our core standard setting, inspections, and enforcement activities will proceed normally through the transition period, and we will continue to work in coordination with the SEC to assess and respond to evolving priorities as we always do. So with that, Erin, I'll turn it back to you.
Great, thanks, Duane. Appreciate those remarks. And so I do want to now jump into our topic at hand. And we're going to address international work. And I know that some of what's going on the international stage has been top of mind for many of investors, including the PCAOB's role and responsibilities related to the Holding Foreign Companies Accountable Act. But before we get into the details, Duane, I was thinking maybe we could take a step back, and I thought it might be helpful if you could give us a sense of the scope of our international oversight responsibilities and its relationship to HFCAA.
Sure. Thanks, Erin. Robust inspections and investigations of audit firms that audit U.S. public companies are really what we're all about. It's our core mandate under the Sarbanes-Oxley Act, and that mandate applies whether firms or the public companies that the firms audit are located inside or outside the U.S. And all firms auditing U.S. public companies are required to register with us, and they are subject to our oversight activities. To illustrate the scope of our oversight program from an international perspective, we have approximately 1,700 audit firms that are registered with us. And of those, about 49% are located outside of the United States. Of those approximate, call it 830 firms, 300 of them are located in 62 foreign jurisdictions. And those 300 firms perform activities that make them subject to our inspection and our investigation activities, including the obligation to be inspected by the PCAOB at least once every 3 years. For the 12 months ended March 31st, 2021, this year, the PCAOB registered firms located outside the US, they issued approximately 1,200 audit reports on US issuer financial statements. And those issuers had a combined market capitalization at that time of more than $11 trillion. So all of that is to highlight for you that while we are a US regulator, our mandate extends to firms wherever they may be that audit US issuers, and thus international focus and engagement is very important to our success and to what we do. I will offer that in order for us to effectively fulfill our inspection and our investigation activities, firms, we need firms to cooperate and provide our inspection teams, our investigators, our enforcement teams with complete, timely access to personnel and to documentation. And in most cases, that is exactly what happens, but not always. In some situations, we are not able to fully inspect or investigate registered firms completely. And partly in response to those types of situations, Congress did pass the Holding Foreign Companies Accountable Act. And I think we're going to talk a little bit more about that now. Erin?
Yep, thanks, Duane. I'm muting myself. I think that's a really helpful overview in setting our stage to now turn to the proposed rule. But since we are in an open comment period for that proposed rule, I just want to outline logistically where we are in that process and provide some disclosures or disclaimers, if you will. So as many of you know, on May 13th of this year, the board issued a release regarding a proposed PCAOB rule that would govern board determinations under the Holding Foreign Companies Accountable Act. That release contains the views of the board with respect to the proposed rule and invites public comment on it. We welcome input from all stakeholders on all aspects of that proposed rule, including the questions posed in the board's proposing release. And we encourage you to submit a written comment if you wish to do so. The comment period does close on July 12th. And instructions for submitting comments are on our website as well as in the proposing release. So I encourage you to take a look at that. And I will just now, before we jump into this discussion, reiterate my earlier disclaimer that the views each speaker expresses on this topic are specifically their own and not necessarily the views of the rest of the board or PCAOB staff. So with those disclaimers out of the way, Duane, can I turn back to you maybe to share with the audience sort of a high-level overview? I think I've satisfied the lawyers, so maybe you can give us
all the fine print that we put at the top. But yes, sure. We're referring to it as HFCAA, Holding Foreign Companies Accountable Act. But that's also a mouthful. But the PCAOB is required under that act to determine whether we are unable to inspect or investigate completely registered public accounting firms that are located in a foreign jurisdiction because of a position that is taken by one or more authorities in that jurisdiction. In addition, the SEC is required to take various actions with respect to public companies that use registered audit firms that the PCAOB has determined fit that criteria. Under HFCAA, such companies are referred to as covered issuers. The SEC's website has a lot more information about the actions that the SEC is required to take under HFCAA, including a release that they issued in March that addresses reporting requirements for public companies that are in fact deemed covered issuers under the Act. With respect to our determination, we issued a proposed rule on May 13th that provides a framework for the board in making this determination as is required under the Act. Along with the text of the proposed rule, the board had an open board meeting and we discussed the background of our proposed rule, the need for the proposed rule, and the intended operation of the proposed rule. I encourage you to take a look at the release that we issued for further details. Nothing we say today is intended to modify or supersede the discussion of the proposed rule as set forth in that release. I also encourage you to provide us any comments or feedback that you may have on the proposed rule through our comment period, which, as Erin just mentioned, runs through July 12th. And we're making it as simple as possible. You can just email us at comments@pcaobus.org. So I will now turn to Liza McAndrew, who heads up our Office of International Affairs, to share some additional details on the rule, the proposed rule. Liza?
Thank you, Duane. Thank you, Duane. And if it isn't a sign of the times, of course, my technology issue started 15 minutes before this was starting. So apologize for not being on camera, but hopefully you can hear me fine. As Duane said, and you'll hear us say a couple more times as we go along in this description, the HFCAA calls for the board to determine whether it's unable to inspect or investigate completely registered public accounting firms in a foreign jurisdiction because of a position taken by authorities in that jurisdiction. I want to cover three aspects of the rule that the board recently proposed and, as already said, is open for public comment. And specifically, what I'll cover is first, how the board proposes to allow two types of determinations. Second, how the board proposes to make those determinations. And third, how the board proposes to communicate its determinations. So first, on the type of determinations, the board is proposing to take a two-pronged approach to determining which firms cannot be inspected or investigated completely. The first proposed approach is for the board to make its determination as to a jurisdiction. In that scenario, the board can determine that all firms headquartered in a particular jurisdiction cannot be inspected or investigated completely. And the board expects to employ this approach in most cases and has indicated that in its proposing release. Second, the proposed rule allows for firm-specific determinations. So we have jurisdiction-wide or firm-specific determinations. So for example, because the jurisdiction-wide determination would apply to all firms headquartered in a jurisdiction, the board's proposed rule provides to identify specific firms that are not headquartered in the jurisdiction, but that have an office there, and that the board cannot inspect or investigate completely because of the foreign authority in that jurisdiction. So that, in summary, is the types of determinations the board proposes to make. I'll move on now to the second issue, which is how the board proposes to make the determinations. The proposed rule would tie the board's ability to inspect or investigate completely to the mandate in the Sarbanes-Oxley Act with respect to inspections and investigations. The board would assess whether the positions taken by the foreign authority impair the board's ability to execute its statutory mandate with respect to inspections or investigations. That assessment is driven under the proposed rule by three factors. First, the board's ability to select engagements and audit areas to be reviewed during an inspection, and to select potential violations to be investigated. Second, the board's access to and its ability to retain and use any document or information that the board considers relevant to the inspection or investigation. And third, the board's ability to conduct inspections and investigations in a manner consistent with the statutory mandate and the rules of the board. Really, this third factor is capturing any other aspect of the board's requirements, statutory mandate, that aren't already covered in the first two factors I just went over. As an example of this, the board's ability to satisfy its inspection frequency requirements. For some firms, it's annually, and for some firms, it's every 3 years. And the board's ability to share information with the SEC as required under the Act. These three factors are not separate prerequisites for a board determination. Rather, if a position taken by a foreign authority impairs the board's ability to execute its mandate in any of these three respects, a board determination could be warranted under the proposed rule. Also, the board need not be impaired as to both inspections and investigations. The board may make a determination under the proposed rule if it's unable to either inspect or investigate completely. In addition to the three factors that the board would evaluate, the proposed rule provides that the board may consider any documents or information it deems relevant. Proposed rule, however, identifies, for the avoidance of doubt and for clarity, certain categories of documents or information that the board may consider. The proposed rule indicates that determinations would remain in effect indefinitely until modified or vacated by the board. However, as proposed, the board would reassess at least annually whether its prior determinations merit reassessment. So now I'll move on to the third aspect that I wanted to cover, which is communicating about the determinations. Under the proposed rule, when the board makes a determination, it would issue the determination in the form of a report to the commission, the SEC. The board's report would describe the board's assessment and the basis for the board's determination, and identify the firms subject to the determination. Promptly after the board's report is issued, a copy of the report would be made publicly available on the board's website. As Duane and Erin both said, the board has requested comments from the public on its proposed rule, and the board welcomes comments or feedback submitted in writing. Erin, with that, I'll turn it back to you.
Great, thank you, Liza. So to reiterate, I guess now for a third time, please do think about submitting a comment or any feedback to our docket. As Duane mentioned, the email is comments@pcaobus.org. Someone is asking about if there's specific countries that pose challenges. So I know we'll get into that a little later. So since we're going to go into the country specific topics shortly here, maybe Rebekah, I'll turn to you, and sort of sticking with the same HFCAA theme, that legislation was born out of Congress's concerns about the implication of the PCAOB's inability to access information from auditors in certain circumstances, which we have a question about. So while the HFCAA has increased attention to this issue, we have at the PCAOB for many years sought to be transparent with investors and the public about these access challenges. So can you sort of describe our initiatives and what that's looked like over the past several years?
Yeah, no, absolutely. But first of all, I just want to say, thank you to Duane and to you, Erin, as our stakeholder liaison. I think that this demonstrates how critically important it is that we can demonstrate to our stakeholders that we're still showing up and doing our day job and fulfilling our mission. But more importantly is that the mission of the PCAOB, as Duane indicated in his opening remarks, is not limited to the boundaries of the United States, but in fact, our mission and mandate is abroad and international. And our international inspections program is crucial to ensure that we can monitor and enforce for compliance with the standards of the PCAOB. It's also critically important that we are able to facilitate our international inspections program to ensure that everybody's playing by the same rules of the road. And, I think over the course of time, the PCAOB has established incredible cooperative relationships with our counterparts and foreign regulators. But we do still have some access issues. So with that little bit in the beginning, I'll go ahead and dive into a little bit more. With the international cooperation is obviously crucially important, and how we facilitate that here at the PCAOB is through a number of facets, including significant engagement between the PCAOB with an international regulatory information sharing body called INFIAR, which Duane is currently the chair of INFIAR, where all the regulators, all the other audit regulators get around the table, and it facilitates really critically important information sharing and recognition that our borders and our financial services markets are global in nature, and that we want to advance audit quality internationally is because we have to facilitate those international cooperations. Now, also throughout the history of the PCAOB, as we have continued to apply our standards compliance regime inspections program internationally, we need to do that through engagement with our counterparts abroad. And in certain jurisdictions, you might come across a conflict of law issue, but we've been able to mitigate a lot of these access issues through cooperative agreements. And I think it's a success that we can demonstrate that just this past April, the PCAOB entered into such a cooperative agreement with the country of Belgium. And I just have to applaud Liza and her team for everybody to get to that success. And right now, there are no obstacles for the PCAOB to facilitate our international inspections program in Europe, which is significant, so that we can ensure that those investors who are availing themselves of the US capital markets can do so in comfort of knowing that the PCAOB's inspection program is applying itself both, domestically and abroad. And we have at the PCAOB, as you noted, Erin, in your kickoff over to me, tried to enhance the disclosure and what we are making publicly available to investors of what we're doing abroad, including those international cooperative agreements and where we are still struggling with access. And sorry, it was like abracadabra. There's something
Sorry, Rebekah. I was trying to get my slides up, and I didn't mean to scare you with it, but that is where investors.
I'm like, what did I do? What did I say? No, but so I appreciate that tee off. And so this will show, as Erin's pointing out, what we're trying to make readily available for all of our stakeholders and investors in particular, to know where we are able to show up and do our job and where we're still having problems. And, I have to give credit to that, making everything transparent happened before I joined the board, started in 2009 and really kind of geared up in 2018, where we wanted to flag as much information as possible for those issuers and investors of issuers who are using auditors that may be located abroad who have not been inspected by the PCAOB. And in particular, starting in 2018, we started making quarterly data available, which included the aggregate market capitalization of issuers whose audits we have been unable to inspect, and data about auditors doing referred work, as well as about the auditors that sign issuer audit opinions. And I think to just sort of circle back to what I began in talking about, was that we want to ensure that auditors who are registered with the PCAOB are subject to the same rules and requirements, and that we are able to go in and do inspection to ensure compliance with our standards. And what is really important as that relates to our international inspections program is that we're applying the same standards and principles of our program, both domestically and abroad, consistently. And we have demonstrated, there's been a certain jurisdiction, which comes as no surprise, where we have not had that same experience. Now, other jurisdictions have raised certain concerns and issues, but as I kind of referenced earlier, we've been able to work through those through cooperative agreements. And I think that Congress has highlighted the fact that we want to ensure that investors who are availing themselves of the US capital markets recognize that issuers who use an auditor registered with the PCAOB should be subject to the same requirements and the same inspections program. And that is why I believe that Congress required the SEC and the PCAOB to take action under the Holding Foreign Companies Accountable Act. And I think that, as we work through that, it's a critical rulemaking where hopefully it will fill that gap, but obviously it's in the early stages. And the lawyer in me, Erin, will circle back also and say we welcome comments as we move forward with the proposal. But I do just want to emphasize that the work that we do, both domestic but importantly abroad, we're trying to increase our transparency. And as Erin has popped up and startled me, our website, we really are trying to make it clear to the investing public where we are having issues, but also where we are successfully facilitating our international inspections program.
Well, I apologize, Rebekah, for the pop-up, but I did want to share and show investors where you can look on our website under the Oversight tab, and there's a whole section on international that has some really good information. As Rebekah noted, that we've been updating quarterly, and when you click through on the audit reports issued by PCAOB registered firms and jurisdictions where we're denied access to conduct inspections, you can search by a number of parameters, including country, firm name, among a number of items. So I'm gonna turn that up, but warn my speakers that they will pop back up again, different slides. So apologies again for that. But I did want to, before we move on, kind of turn to our audience again, because I think a lot of people are surprised, at least when I speak with investors and others, when they hear that there's about $2.3 trillion, Rebekah, as you mentioned, in market cap that's audited by PCAOB registered firms in jurisdictions where we face access challenges. So I'm going to try to ask a poll question here, and hopefully no one's frightened by this pop-up poll like I did with my slide. The poll question is, for investors, when thinking about investment risks, do you consider PCAOB access challenges often, occasionally, rarely, or never? And I'll give everyone a minute to answer that before I share the results with the group. All right, I'm going to end the poll. So hopefully everyone has voted, and share the results with everybody. So, and hopefully my fellow speakers can see this, but what we're getting is that almost half of folks who answered this question occasionally consider PCAOB access challenges, where another almost 40% think of us often, and about 22% rarely or never. So I have to say that makes me happy that over about, oh gosh, my math is bad, but 68% about are thinking about the PCAOB's access either often or occasionally. I don't know if others want to provide comment as they go about their results, but I think I've now ended that poll. So, I'll move on a bit. I think we've covered a lot about, Rebekah, where we have challenges. But Megan, as Rebekah mentioned, access challenges are the exception, not the norm for us at the PCAOB when it comes to our international oversight program. So can you speak maybe a little bit to the scope of our oversight internationally, as well as our enforcement activities?
Yeah, sure, Erin, and hello everybody, and thank you for joining and for having the opportunity for us to engage with you today. So I think maybe what I'm doing is recapping some of the points that others have already made, and maybe this puts some of the other conversation in context again. So, I think as Duane mentioned at the beginning, the PCAOB's responsibilities are mandated by Congress, and they apply equally to all registered firms. So, irrespective of where those firms are located. So, our registration processes, our inspection processes, and our enforcement activities are intended to operate in the same way for all firms. And of course, all audits of issuers need to be done in accordance with the PCAOB standards and rules. So in accordance with the Sarbanes-Oxley Act, the board is expected to periodically inspect firms that issue audit reports for US issuers. So during those inspections, our staff are required to go and obtain the documents and the information that they need so that they can perform those reviews of both selected audit engagements as well as of firms' quality control systems, and perform any other procedures that they think are appropriate in the context of those inspections. Of course, I think it goes without saying that inspections and investigations are really crucial aspects of the board's oversight and critical to the accomplishment of the mission of the board. So to give a sense of the scope of our international oversight activities, I think you've heard some of the stats and data through the presentation already, but the slide that's up now shows that actually nearly half of the firms that are registered with the PCAOB are actually located outside of the United States. So you can see on the slide where since 2004, the PCAOB has actually conducted inspections of one or more registered firms. The board, of course, is strongly committed to enforcing compliance with our standards rules and the related federal securities laws. Obviously, that's core to the achievement of our mission. And as the board and as the members of our organization, we are strongly committed to that goal. when registered firms and their associated persons engage in improper conduct, we also will take prompt action to hold them accountable. And that's to not only hold people accountable for things that we think they haven't done properly, but it's also intended to deter others from similarly engaging in that same kind of improper conduct. So we continue to allocate substantial resources to our enforcement activities and our enforcement priorities, and with an emphasis on cases that involve significant audit failures. So that's really where we tend to try to focus our efforts and our resources. So maybe just to give a little bit of a sense for our enforcement activities related to non-US firms and their associated persons, over the 5 years ended December 31, 2020, 1/3 of our cases related to non-US firms or their associated persons, and that's a term that's defined in our rules, and that's located. So those 1/3 of cases were located in 17 jurisdictions. Currently, when we look at our current caseload, we're kind of continue at that roughly 1/3 level as well. So I think you've heard a little bit about agreements that we have in place with foreign regulators. Those agreements address both inspections as well as investigations, which would fall under our enforcement function. So while non-US oversight might involve some additional coordination considerations with non-US regulators, fundamentally an inspection or an investigation should be the same, whether or not the firm is located within or outside of the US. So I think at that point, I'm going to turn over to Liza, and she'll give us a little bit more information about what does an inspection entail, and really how that might look in the context of a non-US inspection. So Liza, I'll turn over to you.
Yeah, and I'll jump in really quickly, I think, before Liza starts, because we did have an audience question that I'm now seeing, so I apologize, guys, about in the COVID environment, how the access challenges to documents are handled, which, Liza, I think you're going to walk us through sort of how the inspections work. And as you're thinking of your comments on that, if you can, speak to how we've been handling our international inspections during COVID and what if any additional challenges have arisen, I think that would be helpful to the group.
Great, Erin. Yes, happy to do that, and I will cover that. Erin, since I can't see what's on the screen, we're going to go back to the presentation. And if you can let me know when we have up on the screen our slide on home regulator involvement. But I'll get started with reinforcing something that Megan just said, which is our inspections are the same fundamentally, whether it is of a US firm or a non-US firm. And that includes also whether we do the work on our own or if we do it cooperatively with a home country regulator in the jurisdiction. So I'm going to provide you an overview of the inspection process in a minute. But first, let's talk a little bit about how other regulators are involved in our inspections in some cases. Erin, do we have our slide up?
We do, and I will, I'm on the home regulator slide, and then when you tell me to move on, I will.
Perfect, thank you. You guys are having real-time demonstration of PCAOB agility and flexibility in unforeseen circumstances. So on the home regulator involvement, during our inspections, if we start with the two poles of this slide, in many cases, a non-US firm inspection is PCAOB only. Quite a lot of our inspections are done where perhaps there's not a regulator in that country, or perhaps there is a regulator, but for a number of reasons, the regulator chooses to not work with us on the inspection, not in any negative way. It's just for whatever reason, the choice that they make. And in those cases, we notify the firm, we coordinate our inspection, we go and do our inspection, just as we would any US firm, no difference. If we go on to the opposite side of the slide, a joint inspection. In many cases, we truly do all aspects of our inspection jointly with the home country regulator. And that would be before we even contact the firm. We might plan with the regulator. We are out on the field together. We talk with each other about what we find, and we'll see some of that when I get to the inspection process in a minute. So those are joint inspections, and those can be done also for a number of reasons. In the earliest days, in some jurisdictions, the law required that the inspection be done jointly with the foreign regulator. Today, there are many places where that is the law, and it's just become normal for us and those regulators to have a relationship where we plan and conduct inspections together. In other jurisdictions, there is no requirement under legal law that we do, the inspections jointly, but we choose to. The foreign regulator wants to, and we are always open to having a conversation with them about doing that. We find it, the staff finds it very beneficial for us to be communicating with the audit regulators in the home country. We learn a lot about what it is that they're seeing in their domestic environment that firm is operating in, and so we find those joint inspections and those communications very useful. And in the middle of the slide here, we have coordination or observation. So this can take a variety of forms. We have some regulators who like to be the ones to contact the firm and say, hey, the PCAOB is coming, and set up the dates. We have some regulators who say, go ahead and set up with the firm, but I'm going to ask the firm if I can come and observe what you do. And we are open to all of those sorts of arrangements. Of course, we do all of this in compliance with the Sarbanes-Oxley Act, which requires us to keep information confidential, but certainly there are provisions in place and ways that we can work with the foreign regulator nonetheless. So if we move on, Erin, to the next slide on the cycle.
Yep.
I want to give an overview here really quickly of what the planning cycle looks like, and then we'll go through a timeline in a little bit more detail. But the key point that I want you to take away from this slide is that the inspection process really, it doesn't stop once we issue reports. That we plan our inspections, we go out and do it, the board reaches its conclusions. Importantly, it's the board that decides what to issue in a final report. It's a board report on the inspection. And then after the report is finalized, we take a look at whether or not any quality control issues have been remediated by the firm to the satisfaction of the board within 12 months. At the end of all of that, again, we're still not done. We've learned a lot through that whole process. And before we start planning the next inspection, at this moment, every non-US firm, the number of audit reports that they issue subject them to inspections once every 3 years. We do not have any non-US firms at this moment whose activity level on audit subjects them to an annual inspection. But if we're coming back to the firm 3 years later, we might decide to pull it forward depending on the facts that we know. We think about what we learned in that report, in that past inspection, and we think about what have we learned in other inspections. So that cycle is really meant to reinforce that idea of we're always building off of prior knowledge to see how that informs the risks and the approaches for future inspections. I want to reinforce that at this point, this is a reminder, I'm sure to many of you, that we inspect quality control overall for the firm-wide quality control system, and then we also select certain engagements and inspect those engagements. We don't do 100% of the engagements that we select focus areas within an engagement. Again, it's based on our risk assessments. So Erin, if we can move on now to the next slide on the timeline.
Yep.
Perfect, thank you. So this has a lot of the features I just went through on the last slide, but a couple of more details. And this is where I'm going to get to some of the challenges that we've had and some of the different ways we've adapted to the COVID environment. And I want to reinforce before I start that, in fact, with very few exceptions, in fact, one exception, this is the timeline and these are the processes for every one of our inspections. The only exception is for a non-US firm. If those work papers are not documented in English, you'll see the very first item on the timeline is our planning and our risk assessment. We think about whether we need a translator or an interpreter to help us make sure that we get through the work papers, and importantly, to help us make sure we have a means to communicate effectively with the inspected firm so that their firm personnel can really communicate to us what they need to about the work that they did. So you'll see in the timeline that we don't just show up and surprise the firm and say, we're here, we're starting to inspect. We notify the firm in advance of the inspection. The firm then provides us some preliminary information. We've already done our risk assessment. We've done some planning based on information we have, what we know, some of it from the prior inspection, some of it from the annual reports that the firms have to file and other documents that we receive. But we ask them to provide us a little bit more information so that we can further refine our plan. And then you'll see the second item at the top, we notify the firm of the specific engagements that we've selected and the focus areas for our review so that they have everything ready for us when we get out there and to inspect. We also asked them to give us even a little bit more information. So again, we further refine. It's not unlike an audit, in fact, where the auditor is required to continually reevaluate the information and reassess as they go along in the process. So one thing that is a little bit different this year, this is one of our COVID challenges and how we've responded, is the early access and the test of technology. In many cases, for the US firms in particular, we might have gotten advanced access and we might have utilized technology in order to see some of the firm's documents. But in the non-US setting, we had never done that prior to COVID. We didn't ask for work papers in advance. We would fly to the jurisdiction, we would show up at the firm's offices, and we would start our work from there. So there was no technology to deal with. We would get there and there would be firm laptops ready for us. Now, what we have done to pivot in the COVID environment, all of our inspections since we closed mid-March of last year, closed our offices and started working from home, all of our inspections have been remote, whether they are domestic or foreign. That, of course, some of those still are laptops. Some firms choose to send us laptops with all of their data on it for the inspection. We return it at the end. But in many cases, it's technology enabled. And we didn't have all of this set up with every single one of the firms out around the world that we need to inspect. And so we've spent a lot of time working with their IT and with our IT to ensure that we've established effective and safe ways for us to access the data. So then we conduct our field work. Again, we have remote signals here because this year and most of last year, those were remote inspections. We do our field work, and at the end of it, we request and the firm provides supporting documentation for what we have found. Again, we don't keep all of the firm's audit work papers, all of their files. We don't have a need for all of them, but we do have a need for the documentation that supports what we have found that we think might be a finding, we call it. After the field work, we issue comment forms to the firm. It describes what it is that we found, and it gives the firm an opportunity to respond. It may be that there's something that they feel that we didn't see and they want to provide it to us. It may be that there are other factors they want us to consider. So that comment form really makes sure that we've had a thorough process and a thorough understanding between our teams and the firm. Based on those comment forms, we draft a report. We have an internal process to ensure that across all of our many inspections that we conduct, we have consistency in how we've evaluated what we found and decided what belongs in an inspection report. Again, the firm has a chance to review that report and respond, not to negotiate with us about what's in it, but rather that they see it, they can see if factually they provided us everything that they needed that is relevant. And importantly, the firm has an option to provide a letter that we will attach to the final report that the board ultimately publishes. As I said before, all of our reports are in fact reports of the board. Our board votes on them, and once they have voted on them, they are published. Finally, as I mentioned before, if we have quality control findings, the firm has 1 year in order to demonstrate to the board's satisfaction that it has remediated those quality control findings. But we don't just wait 12 months until we talk to them. It is a process of communication with the firm and the staff between the time we issue it and the time that ultimately the board reaches its determination. So that, in some detail, is what happens in an inspection. And again, I want to go back to the only things that are different are translators are needed. We have been using technology a lot more on the remote inspections this year. And as I said before, there would be coordination of varying degrees with the regulators along the way. I want to make one thing very clear also. When we coordinate with regulators, we still independently, the board draws its own conclusions at the end of the inspection. All of the procedures that we needed to have done have been done, and the board has evaluated what it's found to arrive at its own conclusions. We speak with the foreign regulator about what we found, and we find that two-way dialogue very helpful to understand how they are concluding and them understanding how we are concluding. But at the end of the day, it is an independent report of our board at the end of the joint inspection. I'm going to turn back to Erin in just 1 minute, but I wanted to touch on something that Megan said earlier, and to emphasize that while we've gone through with you in detail what happens in an inspection, in our investigations, it's the same concept. When our investigators are looking at a suspected matter of a non-U.S. firm, they are conducting all of the procedures. They're going through the processes the same as they would in a non-U.S. firm. In some cases, when we get access to that information, we request it through a home country regulator, but that doesn't change, in essence, what it is that our investigators are doing in order to form recommendations to put before the board. So with that, Erin, I will turn it back to you and see if we have any questions.
We do, Liza, and I actually think one that we just got is a good one for you, which is how do you determine which international firms to inspect? So I guess we got ahead of ourselves a little, and maybe you can just take a step back and share with the group how we choose which international firms that we're going to inspect.
Sure, no problem. So this is driven by the statute, by our mandate. So if a firm is conducting audit work that subjects it to our inspection, which really, if they're issuing audit reports for any U.S. issuer, they are subject to being inspected every 3 years. So sometimes for risk reasons or for other reasons, we might do it more frequently than every 3 years. We are able to do that. The board is able to do that. But we know pretty well, we have about 300 firms right now, non-U.S. firms that are subject to inspections. And we know when they're coming up due for their 3 years. If there's a foreign regulator involved, some foreign regulators don't inspect every single firm every single year. And so we might have conversations with them about, we're going to need to come in the next 3 years. When will you be there? And we try to align our schedule so that that joint inspection works very effectively for us, for them, and frankly, I think it's probably better for the firm as well.
Great, thanks, Liza. And while you were talking, I've popped up another slide just to show folks where on our website you can find our inspection reports. I think sometimes I've heard from stakeholders that they didn't know they could access our inspection reports, but if you do go again to PCAOBUS.org under oversight, you will see a link to firm inspections reports. And again, once you get there, you will have a lot of different ways you can search for a report. So right now, this is just what the most recent reports that we've issued are. So, they're coming up alphabetically. So you'll see some of the Deloitte firm reports there, but you can also do a country lookup, as well as whether it includes a public quality control criticism. So I really do encourage investors to look at those reports. I think it's really useful information. So we are coming to the end of our time, and we will open the floor to question and answer. Before we do that, I wanted to get one more polling question in from our attendees to ask sort of about your confidence in the audited financials of companies based in jurisdictions where the PCAOB cannot inspect audits is, and please fill in the blank. Much less, the same, more, or much more compared to jurisdictions where the PCAOB can inspect. So I'm going to give that a minute. And please, as we're taking our poll questions, if you have questions for the Q&A box is where you can ask them. All right, so I will end the polling and share the results. So pretty interesting. Almost 90% of you have less or much less confidence in the audited financials of companies where we cannot inspect. And about 13% of you have the same amount. So interesting results. But like I said, I will now turn to our Q&A, and we have a question here that asks sort of, with the extent of remote auditing happening by firms in the last year, I imagine this is related to COVID. The person's asking, what has the PCAOB been doing to assess the impact in 2020 as well as in this current year? And are we able to do that sort of assessment internationally? So I'll maybe, Duane, kick it to you if you'd like to start.
Sure, yeah, I can start. Erin, I do have the polling question still up, just by the by, on my screen at least. But in any case, with respect to remote auditing, certainly, last year, not only were auditors doing their audits remotely, but a lot of the financial close activities for issuers were being performed remotely as well. So that certainly got our attention, as you would expect. And last year, we right out of the gate, we engaged with the firms to get a better understanding of what they were doing to ensure that they had quality controls around their inspections. We also, or around their audits. We also, in our inspections, we increased our scopes to include some calendar year or a non-calendar year-end audits, for instance, June 30th audits, just to start to get a feel what some of the risks were going to be. So we have a general feel kind of what complexities were out there last year. We had a lot of discussions with the firms in terms of what activities and controls they were putting in place to address those complexities. And, that's kind of overall. From an international perspective, it was mentioned earlier that PCAOB is a very active member of the International Forum of Independent Audit Regulators, IFER. And IFER spent a lot of time with the global firms, the largest network firms, to engage with them to understand what they were doing and how they were managing the remote environment. So I think as a PCAOB, we have a lot of information about what the firms have told us they were doing. We are just starting our inspections of 2020 audits for the most part. So we are now going to be finding out, we kind of understand what the firms intended to do. We are now going to inspect to see how that worked out. But the feedback that we've gotten from most of our stakeholders is that it seems to have run more smoothly than anybody would have initially expected. And I think that really relates to some significant investments in technology at preparers and at firms that help facilitate a very unique, obviously, and challenging situation. But Erin, I don't know if anyone else would want to comment.
Erin, I might jump in and just say, I don't have much to add because Duane answered the question, but I do just want to flag that we did, as an organization, try to signal and make public a lot of areas of concern and high risk given the remote audit environment. And as Duane said, we did a significant amount of ongoing outreach, not only with our audit firms, but also with audit committees and seeing how they were addressing the risk. And we were trying to make public and signaling to the firms registered with us and subject to our requirements that we expect that the audit procedures, in particular over ICFR, should change in light of the fact that if the auditor is doing a remote audit, then they can't rely on procedures that were previously used in a non-remote environment. And I think highlighting that, and then as well as focusing on the quality control systems of firms and how they've adjusted in the remote environment is going to feed into our 2021 inspection. But just to emphasize what Duane pointed out was that I want to applaud the work that the staff did in responding to 2020. We did change our inspections program in response to the COVID environment, and I think it bears mentioning again of what Duane just said is we changed the issuers whose audits were selected for inspection and review to include some with calendar year end of June 2020, as well as the interim review, so that the PCAOB did get some real-time updates of how firms are handling it, and then again calling the high-risk areas through a lot of publications.
Great, thanks, Rebekah. I think we just have another question that maybe I'll wrap us up with because we're at almost the time mark. I think it's a really good question, and maybe Liza, I'll give this one to you to start at least, which is in a joint inspection, does the PCAOB ever wish to inspect areas or items that foreign inspectors, or I think foreign regulators, they mean, don't wish to inspect? If so, what happens?
Happens all the time, Erin. We're very used to this discussion. At its heart, a joint inspection and the work that we do collaboratively really is about the foreign regulator respects that firms are doing work, registered with us and did work that subjects them to our oversight, and that firm needs to meet its requirements under our registration, under its registration obligations. And that foreign regulator has its own work that it has to do under its mandate. From one jurisdiction to another, the scope, the frequency, the type of work that the foreign regulator needs to do to satisfy their own mandate could be quite different from ours. But they and we agree to work together so that each side can get done what they need to do in an effective way. So it is quite often that we talk to the regulator. We say, you know, they want to do some things, we want to do some things. Part of the time we might be out in the field together doing the same things, and part of the time we might be in the field together doing totally different things. They obviously, being in the jurisdiction, will spend you know, different amounts of time at that firm and have the luxury to come and go. We go out and try to get everything done effectively while we're there. In some jurisdictions, it could be in 1 year they'll look at a firm with us together, and in the next year they won't look at it, the firm at all. Might not be part of their inspection cycle. So we really see a lot of variations of the extent of coordination in an individual joint inspection, but in most cases our program has been very successful at managing those to achieve the outcomes, the objectives of the Act.
Great, thanks, Liza. And you have brought us to almost exactly 4 o'clock. So I just, on behalf of the attendees, would like to thank Acting Chair DesParte, as well as board members Zietsman and Goshorn Jurata, as well as Liza for, I think, what hopefully was really useful information today. Thanks to you all for bearing with us on the technology still after all these months. I'm not sure we've quite nailed it, but I think we did okay. And then Duane, did you have any concluding remarks?
No, yeah, I guess, you know, I hope this gives you a increased appreciation for the rigor with which we approach our work internationally, and gives you an understanding of why we do that. And you know, I was really encouraged by the poll question results, because I think it demonstrates that at least folks here today understand the protection that what we do at PCAOB provides to investors. And you know, it's so important that that protection apply equally to any issuer, whether it's a U.S. issuer or not. And I think that's what Congress is getting at in the act that we discussed. But it really is fulfilling to know that that you view that what we do really matters, and of course we do as well. And the international component is just so important given the materiality that we talked about earlier. So thank you for being here. We appreciate you know, your interest, and if you have further questions, please reach out to us informally as well. And best to everybody.
Thanks, Duane, and thanks everyone for joining us. And please do reach out if you have any questions for us. And we hope to see your comments in the HFCAA proposed rule docket. So thanks again. Bye-bye, everybody.